Japan, which has the world's third largest economy, pulled itself out of recession in the fourth quarter of 2014. But first, a little background. By November of last year, it had become clear the country was facing a recession after 2 quarters of economic decline. Prime Minister Shinzo Abe sought to pay down public debt with a scheduled sales tax increase in 2014. But the move, part of an overall plan often dubbed Abenomics, backfired when people stopped spending as much as they once had. In order to quell any further declines, the Prime Minister delayed a second sales tax increase. Now things are looking up for the country, but the achievement doesn't seem to be quite what analysts were looking for.
The numbers do look a little bit weaker than we were expecting, and I think the market as well. This is one number we're going to have to see some sustained numbers out of Japan.
A correspondent for the BBC explains, as Aristotle is reputed to have said, "One swallow does not a summer make, nor one fine day, so 1 quarter of positive GDP growth does not make a trend." And a writer for CNN put it pretty bluntly, telling everyone to keep the champagne on ice, right up there in the headline. As CNN notes, that's because growth is nowhere near what was expected from the country. In the fourth quarter, Japan saw 2.2% growth in its gross domestic product, but it was expected to report a 3.7% increase. That's left many calling the growth fragile and soft. Still, regardless of how sluggish the growth may be, it's growth nonetheless, and it's expected to continue. The New York Times says many economists are forecasting that growth will settle into a more modest but still positive trend, expanding perhaps 1.5 or 2% this year and next. For Newsy, I'm Jay Struberg.